following show is intended for mature audiences. Viewer discretion is advised. We are live Friday, July 2nd.
Woo-woo!
4th of July weekend coming up.
Oh, so
How
so
excited are you? Look at you.
oh, dude, I'm
Bless
ready to go.
America.
Oh, dude, I got the whole get up for.
Oh, boy.
I
Look at
got
this.
the America hat. I got the shirt. I got the socks with the flags on the side, blue glasses, baby, all day. Check it out.
Well, yeah. You're not lying. When you first walked in, Dre says, well, at least you didn't wear your America thong. And you're like, how do you
know?
how do you know he's not wearing it? That's what you
You
run
got
in the
cameras in
streets
my house?
tanning later.
Yeah.
Oh, yeah.
I'm
So
American
so
man
you're
thong.
you're excited about 4th of July weekend. I'm excited about all the stuff that we got to cover today. We have some really big foreclosure news coming in. A YouTuber is running for governor of California. That shouldn't be a big surprise. It's like California's pretty much like a joke at this point. So it's like, yeah, let's have everybody run. Go ahead.
They got like 100+ people running for governor over there. It's just like, good Lord.
It's beyond insane. So, and we have a lot of things coming, changes being done in the mortgage industry, some big news for the rental market. So for all you landlords out there, so crazy news coming in for that. We have a lot of fun stuff today. A lot of fun stuff. But how do you feel about 4th of July? I don't know if you like it or not. Well, I got a Patriot hat too.
Oh, look at that.
There you go.
The Patriots. I guess we'll go with that.
What's
It's
more
not-
patriotic than the Patriots?
We'll just let it as a Patriot on the hat, not as a New England football Patriot. You just have a Patriot hat on the Patriots.
Whatever you need to justify, but it's patriotic. Yeah. So yeah, Tom Brady going to Florida doesn't mean shit. Patriots are still patriotic.
Oh, are they? They are the
So,
white and blue. So
You had in
Okay.
here some fun facts about 4th of July. What's that?
I figured I'd throw some just fun 4th of July facts out for everybody. So we didn't actually declare independence on the 4th of July. The official vote actually took place 2 days before the Declaration was published in papers on July 4th. So technically, today is the true Independence Day. But the papers weren't published back in those days. Nowadays, if they would have done it on the 2nd, everyone would have known about it. But they didn't publish the papers until July 4th when everybody knew about it. But they made the declaration on the 2nd. America will enjoy 150 million hot dogs during the 4th of July, enough to stretch from D.C. to L.A. more than 5 times. A lot of hot dogs. Especially hot dogs are trash meat of leftover packing plants.
Oh, how American is that?
An estimated 2.5 million people lived in the nation on July of 1776. As of April 26, 2021, 331,449,281 live. So, just a few more people.
They were getting busy during these last 300 plus years.
252 years. The very first 4th of July fireworks show took place in Philadelphia in 1777. 4th of July did not become a federal holiday until 1870, almost 100 years later, before it was actually a federal holiday. Only 2 men signed the Declaration of Independence on July 4th of 1776. Charles Thomas and the infamous John Hancock were the only 2 men who actually signed the Declaration of Independence on July 4th, 1776. The other 54 delegates signed over the course of the next month. There is something written on the back of the Declaration of Independence. Not a hidden treasure map, people would think.
I don't know. I believe the documentary National Treasure. So
it's not a treasure map written in invisible ink, according to National Geographic, written upside down across the bottom of the signed document that reads "Original Declaration of Independence dated 4th of July, 1776." And they actually can't determine when that was actually done. There's no documentation on it, but it's very common when back in those days they rolled up parchment and stuck them in tubes for transportation. At some point, somebody wrote on the back of it, but they have no idea who actually wrote that on the back of the Declaration of Independence.
interesting.
So if you actually want to verify that, you can pull Nicolas Cage and go steal the Declaration of Independence. He kind of gave you the book on how to do it. If you
We're
just watch
not
the movie.
encouraging you to steal the Declaration of Independence.
You can go try though. I think it'd be. I'll watch the YouTube video of it. And the last thing, which kind of blew my mind, wearing Old Glory violates the U.S. flag code. So anything that is patriotic like this, a hat, a towel, t-shirt, beach towel, shorts, headbands, or any other item that represents the U.S. flag, turns out you're in violation of the U.S. flag code.
When is that code created?
When they created the flag and stuff like that. I don't know when it was
that
created,
far
but
back.
but that's why I think everyone's just kind of like, back then when they created it, it's like, hey, you can't take the flag and cut a flag up and then wear it as a shirt, because you think back in the 1700s.
Yeah.
But nowadays it's like they didn't anticipate you could mass produce like this kind of stuff at the scale. And I think it's one of those laws. They're like, yeah, nobody's going to enforce, and it's not a law. It's just the code of the flag. So you're in violation of the flag code by wearing anything patriotic, owning any kind of American flag.
Well, I'm sure the
like, really?
Founding fathers probably hoped that we would update a lot of the shit they came up with.
Yeah, this is like his code. We're like, yeah, okay.
After a couple hundred years, I think some things should perhaps be updated. But okay.
They got bigger problems to worry about in Washington than people being patriotic for 4th of July.
For sure. So is that your fun facts for 4th of
July? That is
July?
my fun facts for 4th of July. We will catch you guys next year. See ya.
What do you got going on this weekend? Any interesting plans? Anything fun?
I am going to hang out by a pool. I'm going to sit in the sun. I'm going to drink a few adult beverages. I'm probably going to light a firework or two off,
Very nice, very nice.
Yeah, another thing I saw, I didn't put on there, but Americans will spend over $1 billion in fireworks 4th of July weekend.
Wow. Even though it's illegal in so many states.
People find ways. You can buy fireworks off the internet and get them delivered to your house.
I found it hilarious last year when they were like, more in California, they're like, no fireworks anywhere. There's going to be
then San Diego's like
penalized.
Boom, and
all of California, the sky was lit up with fireworks. They're like, there you go, that's pretty cool.
Yeah, people with like fire bands on. They're like, no, screw you. It was just kind of like this year during New Year's Eve, like how San Antonio skyline just went absolutely insane when they're like, okay, we're going to cancel the fireworks. We don't want people congregating together, and so like everyone took it upon themselves, and they're like, small gatherings, and the skyline just was absolutely nuts.
Well, even for me, where I lived, I didn't even have to leave my house. It was pretty much everywhere around my house on a 360 perimeter, fireworks everywhere. It didn't matter where you went around my house, there was fireworks everywhere, and it lasted for a good hour.
It was nuts. Like I'm sitting in my house, and I'm just like hearing this sound. It's like, is that thunder? Like, what is that? It was like shaking like the apartment. I was like, oh my God. And stepped outside. I was like, dude, that's fireworks. That's insane. Like,
you should get your foundation checked.
I always thought it'd be fun to do is like fly over a major city, like during like one of these like holidays, especially like New Year's Eve. Like how cool that would look if you're just flying like over like this city and just watching this whole skyline just blow up with like fireworks.
Oh, we got to tell our buddy Andrew to come pick us up and take us for a little airplane ride during 4th of July.
That'd be nice if he ever came and saw us.
Yeah, well, he's bougie now, Mr.
Alaska, Wisconsin, Florida,
skiing and whatever. But getting on to some real estate news. Hope you guys have some very fun and safe 4th of July weekends. Remember, don't drink and drive. If you're going to do that, make sure you drink before you drive. Don't do it while you're driving. You can get pulled over. Isn't that the rule? Don't drink and drive. It doesn't say don't drink then drive.
Oh man, you got a lot of things to learn about American culture.
I'm trying. But getting into some real estate news, I wanted to start with the FHA is going to allow interest rate reduction. So we have the FHFA will allow borrowers with mortgages backed by government-sponsored entities to reduce their interest rates. So the FHFA hopes the move will allow more borrowers with Fannie Mae and Freddie Mac mortgages to reduce their payments and stay in their homes. Borrowers with permanent COVID-19 hardships are eligible for the loan modifications regardless of their loan-to-value ratio.
Wow.
Previously, only borrowers with a market-to-market loan-to-value ratio of at least 80% were eligible for the reduction. The ratio takes into account the remaining mortgage balance and the home's current market value. The agency is allowing the loan modifications in response to the unprecedented nature of the pandemic. The Federal Housing Regulator wrote, allowing more families to qualify for an interest rate reduction will prevent unnecessary foreclosures, help strengthen the enterprise's books of business, and make sustainable homeownership a reality for more families currently living in the uncertainty of forbearance. So you have the FHFA. Man, I had it. I nailed it twice.
Yeah, you did.
The third
like,
time, I
got it
did
right.
freaking stutter box. So they're doing that now. There's a few articles with them that it's just like one piggybacks on the other one. So you have also the FHFA won't give servicers a break on the CFPB rule. So the Federal Housing Finance Agency is requiring Fannie Mae and Freddie Mac servicers to follow the Consumer Financial Protection Bureau's new foreclosure rule a full month before it goes into effect. The move clarifies how servicers should approach the month-long gap between the foreclosure moratorium expiring at the end of July and the CFPB rule, which takes effect at the end of August. Starting during that period, servicers must now adhere to that rule, to the procedural safeguards for foreclosures. In most cases, servicers will not be able to initiate a foreclosure until the end of the year.
Cool.
So for everybody that was getting excited about foreclosure marketing, this is something, pay attention. It continues today. Many families' finances are improving, allowing them to exit forbearance. The protection FHFA is putting in place today will protect vulnerable families as they begin their financial recovery from the impact of COVID-19. According to the new rule, servicers can initiate foreclosure action only after the borrower has submitted a loss mitigation application and either isn't eligible for, breaks, or rejects a loss mitigation agreement. Those extra steps do not apply if the borrower was already 6 months past due by March 2020. All right. So let me repeat that again so it sinks in a little bit. So servicers can initiate a foreclosure action only after the borrower has submitted a loss mitigation application and either isn't eligible for, breaks, or rejects a loss mitigation agreement. Those extra steps do not apply to anybody that's already been past due for more than 6 months prior to March of 2020 or if the property is abandoned.
But don't submit the loss mitigation application.
If they don't submit it, then they can. That's what I'm curious about because they say they need to they can't start until somebody submits it. So it's like if you don't submit it, does that mean that they just can't foreclose on you?
Well, the way I kind of interpret it is like because of that last sentence, those extra steps do not apply if the borrower was already 6 months past due. But I think there's probably a trigger
prior to March 2020.
I know, but it's saying like if when you do reach 6 months, eventually they're going to be like, okay, that no longer is null and void. You can't just like indefinitely be in foreclosure and never pay. Like there's something in there that they didn't put in that article that's like at some point the servicer can initiate the foreclosure.
And these are the things that you guys as listeners need to start actually researching yourself to figure out what these little things actually mean, expanding on those rules and trying to get more clarification on that. So the rule also establishes expectations for how servicers should communicate with borrowers about loss mitigation options. The new regulation allows escrow shortages to be included in the loss mitigation plan to provide an alternative to paying excessive amounts in a short period. Servicers can offer streamlined loan modifications to borrowers as long as the modification does not increase the monthly payments or stretch the mortgage term out beyond 40 years. So servicers can't charge any extra fees for the loan modification, and if a borrower accepts a loan modification, the servicer must waive any late charges. So now going back to how they're saying that you can refi for a lower interest rate, even though you don't have enough equity already built into the property, which was before you needed 80%. So you don't have the equity. Now they need to drop your interest rate so your payment becomes affordable. So they need to extend that mortgage, but it can't go past 40 years.
Yeah.
I mean,
Well,
there
that's what I
seems
said,
like a lot of...
That's why I've always said, like, I'm not going to bet against the federal government. Everyone's like,
Yep.
oh, they're just waiting for they're going to destroy this. They're going to do that. It's like, it shows right here. This is a perfect article of the extent that they are going to where everyone, no one ever thought that they would do that.
Yeah.
It's like, but they always do. No one ever thought in 2008 the Fed would step in. I just saw something the other day. They were worried about putting this Fed stepping in and backing up markets like they were doing because they felt like it would incentivize people to take more risk. Well, then that's exactly what happened. And then now the pandemic came out and they stepped in bigger and faster than they did previously and at unprecedented levels before everyone knew it. Oh, I never thought they would do that. It's like, it seems like every time everyone talks about like, oh, they're going to destroy the dollar, they're going to destroy all this stuff. It's like, and they have no powder left in the case. It's like they come up with new things every single time. Or it's like, okay, they extended out 40 years. What happens now? It's like, okay, we go 50 years. Okay, we go, you can be underwater on your houses. They can always keep extending things further and further and further and further and further and further down.
This is something that you and I have talked about a lot on and off the air. Oh, look at that. I always wanted to say that. So, about how every time we hear, especially the economists that we follow, right? So we'll listen to people like Peter Schiff or Jim Rickards or even Robert Kiyosaki and other people that are just, they've been investing and in the economy for decades. And they always talk about how this can't keep going. This can't keep going. Yet it keeps going, right? 2008, yes, it was bad, but it should have been tremendously worse, right? And it wasn't. And then everybody's like, this isn't, you're going to see 2010, it's going to tank. 2012, oh, this is it. They can't keep propping it up.
14 16,
just
18,
keeps
20.
Going. Now, 2020, everything that you're going to see, this is it. This is what it's going to be. Stock market, all-time high. Property values, all-time high. Wages being increased. People having extra money. I mean, you're looking at all this and you're saying, one thing that you and I always talk about is just, what the hell is going to ever make this when we have never been in this kind of economy before? Before, what they do, because what these economists talk about and what they interpret is when the U.S. used to be backed by gold. So it was backed by a physical asset, a hard asset, and it had limitations. It had a lot of things. After that backing in 71 went away, and they started moving further away. They started playing more with the markets. And the more the U.S. played with the markets and thrived, the more other countries stepped in and started doing the same. So when they say, oh, it was China's going to take over, they're all doing the same exact shit. I mean, Japan's been in a stagnant economy for over 20 years. And it's not hurt. Like, they're still doing fine.
They're still very prosperous.
Exactly.
It's like when they say stagnant economy, it's like, okay, their stock market hasn't gone anywhere. But you look at Japan, like, it's not like it just froze in time 20 or 30 years because of the 90s when they had their big meltdown.
Yep.
But it's like, that's all. It means same thing with, like, the paper money that's tied to the lumber prices. Like, 1700s now, lumber's, it's fallen over, like, from 1700 all the way down to 700. Yeah. It's like, then everyone's like, so lumber prices are about to fall by that much. Like, no, that's the paper market attached to these commodities and stuff. Just like Japan's, like, they still have built their economy. They've still grown their economy. It's like just the dollars or their currency to their stock market hasn't grown in value. So you got two different things. You got that. What is it? The stock market is not the economy. And the economy is not the stock market.
Yeah.
Kind of thing. To where it's like, yeah, they're
ideally
they're loosely tied together, but it's all based just like these tech companies.
Yeah.
It's like, why are they valued so much higher than your traditional one, even though their margins are nowhere near what like a Walmart or those established businesses are? Is because people believe in the intrinsic value that what they want it to be. It makes it that stock price that they can continue to grow. It's like, but that's also why they have such more wild swings in their valuations, is because like one bad news can come out and their value can fall down to the floor. They're not growing as fast as they thought they should be, so it brings them down. So it's kind of the same thing.
I mean, well, then the article continues. If borrowers are still delinquent, servicers must contact them well ahead of the end of their forbearance period to give them the option to complete a loss mitigation application. Lastly, the rule adds clarity to the definition of financial hardship to mean any hardship that the pandemic brought on, either indirectly or directly.
Literally everything.
From March 2020 to February 2021. The rule will take effect at the end of August. The Bureau is by no means trying to prevent every foreclosure. Borrowers who were already more than 6 months behind before the pandemic started will no longer be spared. And the CFPB noted that some foreclosures are unavoidable. So, two things here, right? One is, in order for you to still get foreclosed on, you either have to have been 6 months behind prior to March 2020, right? Or two, literally ignore everybody and not do the application, not do anything, completely let the whole shit just burn in order for you to go. Because they're making it to a point where it's like, just submit the application.
I was like,
you don't have to
participate.
It doesn't even matter.
Just respond.
It's kind of like what we talked about when they did the unemployment and everything when Biden got elected, that he did the unemployment for anybody. It didn't matter. Like, you didn't need to prove that you were looking for work or anything like that. You just filed for unemployment and you got it, period, right? So I think this is kind of the same thing. It's like, as long as you fill up the application, because they need you to do something, you're good. You're taken care of. You're not going to get foreclosed on. They're going to figure it out. They're going to modify the rules. They're going to lower your interest rate. They're going to extend. They can go up to 40 years now. All these things, they're going to look at them. They're going to try to make sure that less and less people get foreclosed on. So that's one. And then two is what we've talked about before. And I interviewed Dan Francis. He's the CEO of Stepstone Realty. That interview will be coming out this week, so make sure you pay attention to that. We covered a lot of things about this. Dan is a wealth of knowledge, has been investing for, decades now, 20 plus years. But one of the things that we talked about is that you cannot underestimate people's, I don't even want to say laziness, but I would say like stress level, overwhelm, or everything to not fill in that application. And you and I have seen it. We've done for short sales before with people that have been foreclosures, and short sales are not an easy process for a homeowner to complete because of all the paperwork and everything that needs to get done. So if in that moment, we saw so many people actually go into foreclosure because they wouldn't do the short sale process, I still think that there's probably going to be a large amount of people right now that's like, because they say fill out the application. Okay, but what is the application? Is it like a simple application, or is it like the short sale process that's like, well, here's this whole thing?
That's kind of what my point of it is as well. It's like, how many times do we know people that if they're behind, they just ignore everything from their bank?
Yeah.
Like the stack of papers and stuff like that. And that's where I said there's going to be some kind of trigger. But what I read from this is, they're extending these foreclosures so far out and for so long that by the time they go to foreclose, none of us are going to buy them. They're going to be even with the housing prices like increased as much as they have, because like, and most of these people that are probably going to get foreclosed on were the people that took out FHA loans, were over leveraged at the very beginning, didn't have cash beginning with. So it's not like their loan values, if they've been in their houses for 10, 15 years, more than likely. It's more people that were just in it recently. That if you ever looked at one of those statements that somebody's a year behind in their payments, like their mortgage balance is so astronomically high because that interest rate goes backwards and starts like really compounding the overall payment. And I bet if you are in foreclosure and you, an investor, want to buy it, you're paying all that back interest, all those back penalties, none of that stuff, all those late charges, all of the penalties, and what they say they were going to get rid of. The late charges.
Yeah.
So all of that stuff's going to be back on there to where like they're going to be so far underwater that it's not going to be worth anything to even pick up, especially if there's deferred maintenance on top of it. Where like it's like, okay, they've been behind for 2 years now, and because I said if they can't even start to foreclose until beginning of next year, well, March of 2022, that'd be 2 years that somebody could have potentially fallen behind on their mortgage. Like 2 years behind on a mortgage at 4 or 5% interest rate, because they obviously didn't refinance during these low times. So those interest values are going to be astronomically higher.
Oh, and then, so I have a question then, because you brought up an excellent point, which is very rare, guys, if you ever watch the show. But you brought up an excellent point, is that these people now are going to essentially be, well, I'm curious, are they going to be over leveraged? Or, well, they have to be, because I mean, I'm thinking they are saying they're going to extend to 40-year mortgages, right? To make the payments and all that make sense. If the house needs any level of improvement, you're over leveraged, right? But then you add closing costs and all these things. So these people that are being over leveraged, they are refinancing now. They're pretty much guaranteed that now they are tied to this home.
They're never going to get
like at least the next 10 years.
Oh, yeah.
If not more, because it's like aside from a short sale, what other option do you have from getting out of this home? Well, massive appreciation?
Well, that's what I said. Like, if you extend it out to 40 years and then the interest rate and everything, like you're going to be you're currently underwater. Then you got to account for sales costs of 10% for your real estate agent fees and all the other concessions and stuff. And then you got to maintain the home. Like you're talking, you do have to be in the house for an extended period of time. And you're there and you're never going to get out from underneath it. And your payment's probably going to be so high, you won't be able to rent it out to cover it. So like you could be recovering from years of trying to get over this stuff. So, but it is one of the things that it shows that they will protect the housing market in any way they possibly can. Because I made the comment before we started when I saw they're now Fannie Mae. You have an article in here about it.
Yep.
The 40 years. I mean, why don't you go into that before I make the point?
Before we moved on to that, I wanted one more thing that I saw out of this is for any of you guys looking to do any type of foreclosure marketing, they pretty much gave you their play right now saying that anybody that was 6+ months behind prior to March 2020 is no longer going to be forgiven.
That's crazy. 6 months beforehand.
So my question is, as an investor, what is it that you can do to find out who was 6+ months behind prior to 2020? Because this is what I see as an investor, as somebody that picks up these kind of distressed homes, right? Is if you were 6 months behind prior to March, you add all of the appreciation, all of this time, everything here, you're going to be facing a huge hardship, which not many investors are going to be able to help these homeowners, because it's probably going to be like, even if you were to do subject to, which, a lot of people find sexy and don't understand how the hell it works. But even if you were to do a subject to, your reinstatement on something like that is probably going to be tremendous.
Yeah. Could you imagine 2 years of payments you just think about it, like your average payment, $1,300. Okay. What's that? 13,000 plus another 2,600, 15,600, $15,600, 2 years. You're talking $31,200
grand
plus
reinstatement.
Yeah, it's like plus all the late fees on top of that stuff. So it's like you're talking 40, 45 grand.
Well, we know alone, and we know from dealing with foreclosures, it's the reinstatement plus the attorney fees plus all these other things. Like there's a lot of fees involved in a foreclosure that's beyond that. Yeah. So you're looking at, again, like we're saying, probably on a standard home, you're probably looking at 35 grand just to pick up the home. That's not including repairs or anything like that. So unless they had a decent amount of equity and the area has appreciated
and the payment is attractive to where it's like, hey, I can rent this thing for $1,700 and my payment's $1,200 or $1,300.
And that's something
then that's a terrible return on the cash on cash return aspect of it.
Well, but that is something that we talked about with Dan, because Dan is part of Stepstone. They have a whole program for their agents for short sales. Like this is a time that I think when we will see short sales really pick up, because for those people that were 6+ months behind, their only option might only be a short sale, because if they're already, I just can't see, if they're already 6 months behind, they're already struggling. How were you able to perhaps find a job during this time period when you obviously were struggling prior to this, and continue maybe to make payments, which I doubt. If you're already that far behind, you probably just stop making payments.
Yeah.
So
and then people are notorious for, hey, I got my job back. I know I had this $1,400 payment before, so I should probably save that $1,400. And so whenever I do want this money, I have money to do that. No, they go spend it. Case in point, I went to a foreclosure and the loan transferred from one lender to another. And then they tried to make a payment they weren't doing online, and their payment got rejected. Yeah. And instead of trying to figure out to get the payment to the right lender, because it went from like Chase to Aquin or something like that, and they just stopped making the payments. It's like you had the money, you were ready to make the payment, and then it went to another lender, and it's like, so you have the money to pay it then? Like, well, no. It's like you're just as broke now as you were when you were making your payments, and now except you have a new 75-inch plasma screen TV and 2 brand new trucks sitting out in your driveway. So they blew the money because it's not like they hit a financial hardship. It's like they just the loan transfer, and they couldn't make the payments, so they just stopped making all
John,
together.
You got to understand that you got to value quality of life, man. That big screen TV and those new trucks, like, it makes me happy.
Oh,
you know?
For all of like 4 months.
Come on.
So
it is something that is just like, you don't understand when I'm in front of that Instagram picture, man. It's everything. It's everything.
Those likes that I get are so cute.
But yeah, guys, there are opportunities for investors, and this is something that always annoys the shit out of me when people are like, oh, you guys are vultures. You guys are taking advantage of everybody. No, nobody else can help them. Do you understand this? Like, in a lot of these situations, it's because the government can't help, or whatever the financial institutions can't help. A realtor can't definitely help. They have no options for them. So the only people that have the knowledge, the resources, and the capability to help them is us. Well, we're the only ones willing to take that risk to help them out.
I mean, this isn't financial advice, but I mean, a lot of times with those short sales and stuff like that, where like if you had the knowledge and you knew how the process worked, we were the ones, the investor agents, whoever they were helping walk the people through the short sale process.
Yep.
Because that paperwork is kind of confusing. It is, and there's no guarantee they're going to accept it, and you have to do the paperwork back and forth. Like, it's a long process.
Yeah.
To where like most people just get fed up and give up. To where this is an opportunity to where if you find somebody that's in this situation, be like, look, I'll buy the house from you, but you have to go through this process to get this loan modified to get it off your back. It's like, and then I can buy it from you, give you a couple $1,000 to move, and get you out. Like, it's going to be on your credit. I can do the sub 2 at that point, but you can't do the reinstatement. You have to do the loan modification, because I even said the payments can't rise.
Yeah.
So unless they put something in there that says you're going to stay in this house for at least 5 years, which I don't think they would do, an investor agent person could help walk them through the modification process, get the interest rate lowered, get the payments to stay the same, get the loan modified, get all that stuff back in there. So now instead of putting 45 grand, 30 or whatever it may be to buy the loan subject to, you just now extended the payments, put the things in the rear or the arrears or whatever it is that you need to do to be able to make that house profitable for you. And it might be just that. It's going to take a long process to walk somebody through that deal to get them to the finish line, and then you buy it at the very end. So that is something where I see you being able to educate yourself enough on.
And here is a warning for all of you new wholesalers, or, even if you've been doing this for a year or two, you're still new. All right. You don't understand the process. You haven't dealt with this enough. This is serious. Take it serious. All right. This is not just another money grab for you. These are people that are having real financial hardships. There is a way to help them. There is a way of doing this smart. If you don't know how to, partner with somebody that does. Partner with somebody that has been through these cycles, that understands how to handle a foreclosure. Because if not, you are not only not helping them, but you're causing them so much more distress, and you continue to give a bad name to the investment community that is actually out there trying to help people. So if you don't understand the short sale process, if you don't understand the foreclosure process, subject twos, you don't understand this, stop jumping into this hoping for the best, because you are, at that point, you are not considering the seller. You're considering only your needs. And that kind of greed, that kind of ignorance is what gives investors such a bad name. So I recommend, please, if you're going to do this, which is it's going to be very necessary, partner with somebody. Find yourself an investor that has the experience, that's been through these cycles, not an investor that just talks a lot, somebody that's actually been through the cycles, and partner with them on these deals until you learn it. Once you learn it, you can have at it. But please, take it, understand it, and do what's right for the investor, for the homeowner.
Let's go with the Ginnie Mae Unveils the 40-year mortgages.
On this whole topic, 40-year mortgages, Ginnie Mae is set to introduce a new 40-year mortgage term for its issuers on the heel of the administrative shakeups at the top of the housing industry. So only modified loans with terms greater than 361 months and less than or equal to 480 months will be accepted, but there will be no loan amount restriction, Ginnie Mae said. So the mortgage bond giant said it expects the new pool to be available in October. We have begun the work to make this security product available because an extended term up to 40 years can be a powerful tool in reducing the monthly payment obligation with the goal of home retention. It's important that Ginnie Mae issuers have secondary market liquidity for options that our agency partners determine are appropriate for supporting homeowners in distress. We think the market will find value in securities backed by these loans, so we wanted to provide a pooling structure that would enable issuers to capture that value, thereby enhancing their ability to provide the strongest possible option to the homeowners while remaining respectful of investor capital. HUD senior advisor said finding solutions to help keep people in their homes has been a priority of HUD's leadership team over the past 12 months. As interest rates rise, this 40-year feature will enable more payment reduction options to homeowners. Ginnie Mae has been integral to the interagency actions to prevent foreclosures for homeowners experiencing financial hardships as a result of the COVID-19 pandemic. So, 40-year loan. And I found an example that I wanted to share with you of what this really means. It's not just the extra payments, but kind of how we talked about earlier of what does this look like over the course of this people's lifetime, right? So if somebody buys a $350,000 home at 6% interest, yes, I know interest is lower, but this was the example, 6% fixed interest for 30 years, they're paying a total of a little over $405,000 in interest. Now, if they do the same $350 loan for 40 years, which is going to tack on another 0.25% to 0.5% interest, that's $603,000 in interest payments. So you're going in a 10-year difference, you're going from paying $400,000 in interest to paying over $600,000 in interest on the same home. Like that's a huge difference, and that's just interest payments on the home. That's not the actual value of the home and stuff. So, I mean, you look at that over 40 years, like we talked about before, how the hell do people climb out of that? You know, what does that mean for an already tight housing market? We already have this tight housing market, low inventory, everything. And the HUD, like they say, they've been focused on this for the last 12 months to see how it is that they can keep more people in their home. So how can you keep more people in their home? We're not building more homes. People need more homes. It's like, I think when we talk about the affordability, when people are saying, you know, when's this housing market going to stop or calm down or slow down?
Crash. It's like,
I don't look at these policies. Where do you see this happening?
Well, it's one of the things too, like point I was alluding to earlier that we talked about. It's like they will do whatever they can to keep people in their homes, to keep the real estate prices continuing to rise, because they realized after 2008, like the pain that caused when home values drop that much and real estate values open that much. I mean, you look at politicians, like their personal net worth, most of it is held in real estate in itself. So where you modify a loan, do 40 years from 30 years. I wish they would have put in like, what's that do on a payment? Or like the drop in the payment, because that's what we're like. People don't look at the value of homes. They don't look at interest rates. They don't look at anything. What they look at is the payment. Can they afford that payment? Mm-hmm. So they don't care about it. Majority of people don't care about anything else. But us as investors do care about those, but what the values actually are. But now when you do that and you say you go from a 30-year to 40-year and it drops a payment $120, that now allows a whole new pool of people to buy into that. So what that also does is it allows interest rates to rise and not tank the market to where it's like, hey, you can do a 40-year, but now this payment's the same as a 30-year at 3% is a 40-year at 5.5%. It's the same payments. It allows interest rates to rise across the spectrum to where when you diversify between 15, 30, 20s, and 40-year mortgages and stuff like that, it allows things to kind of stable off across the whole industry. So it would be a way for them to increase interest rates without tanking the real estate market because they just extended the time frame.
Yeah.
So it's just like, but people don't realize, like your point exactly, like the difference between how much money you actually pay over that course of that time. But nobody looks at that kind of stuff. So I think that is exactly what it's going to do is like they are going to back the market to where like I was at the gym the other day and some gentlemen were talking about like, oh yeah, the housing market always crashes every 10 to 15 years. It'll happen here really soon. Like, yeah. And if it doesn't, it's like policies like this, them stepping in the Fed and backing up the entire mortgage industry in March of 2020 when it looked like it was going to completely just fall apart. Like they're going to do all kinds of things to stable off that market and do all kinds of new creative things. Because if they're going to 40 years, what's stopped going to 50 years? I'd be curious to see like what is the longest mortgage term in the entire world. Because I know 30 years was just kind of a thing here in the U.S. where over in Europe, they have like 40, 50-year mortgages.
Even in the U.S., I was looking at it, they do have, some lenders do offer a 40 and 50-year mortgage. Much higher interest rate and everything. But in the qualifications, it's like you need an outstanding credit. You need like a ridiculous like kind of job security, consistent payment, all these things. But they do
because
offer
like
those
you
products.
Can't sell that to the federal government because most of these mortgages get sold to these massive banks that go packaged up in bonds and sold off to institutional investors.
Yep.
Or like banks don't hold these, but something like that the bank would have to hold. So that's probably why there's like, hey, we'll lend you that amount of money, but we're doing a higher interest rate over 50 years because they're the ones stuck holding that paper for essentially forever or until they sell that thing off to other people. But somebody's got to service that loan.
Yeah. So moving on, like I said, buy and hold investors. There's some news for you as well. This news prior to this falls for everybody. But this is for the rental market, and there are three. So this was an actual interview that was being done, and I just took some notes on it. But the housing headaches are shifting to the rental market. So there are three factors likely to drive rents higher over the next decade, over the next year at the minimum. And the first is the expected normalization of the economy as people get back to their pre-pandemic routines. Office buildings reopen and urban life returns. Data from apartment lists shows that rents have risen at a strong rate since March in the metros that were hardest hit by the pandemic. Apart from how you feel about rising rents, this dynamic should be welcome. Normal life is better than people sheltering in place and working from home because business districts have shut down. The second is how the recent frenzy of home buying has changed the rent versus own calculations. So home prices nationally are up by about 15% since early 2020. Significantly more in some metro areas like Austin, Texas, while inventories, despite rising somewhat in the past month, remain near historic lows. Some people who might have bought a home are deciding to keep renting instead to give the market time to normalize. So, on a cost basis, renting has become relatively more attractive, even with the decline in mortgage rates. If home prices have risen 15 to 20 or 20% in your area, an apartment with rent that's 5% higher is a relatively better deal than it was 18 months ago.
So they're saying 5% higher than the mortgage payment? Or what did you say? An apartment with a rent that's 5% higher.
I'm guessing just the rent is 5% higher.
Okay.
So, but now my question is, looking at that, right? So you're looking at this last line, deciding to keep renting instead to give the market time to normalize. Is that even a smart play to try to give the market time to normalize? Because I hear this time and time again for so many investors. The mostly are new investors, but I get a lot of investors reach out to me through like Bigger Pockets and stuff, and they're saying, "Hey, when do you think is going to be a good time to get into market? Should I just wait for this to slow down?" And again, this is why we do this show, right? This is why we cover all these articles, all these topics, because it's like, look at what Ginnie Mae just offered. Look at what the FHFA is proposing with foreclosures or everything. Why would you think that this is going to slow down anytime soon? And my question to you, I guess, would be is, if you are a renter, is now the right time to buy a home, or would you recommend somebody wait to buy a home? What do you think?
Well, I mean, it goes back to the same thing we've always talked about. It's like, can you afford it? That's what it comes down to. It's like, don't look at prices. Don't look at the values. Don't look at what's going on in the market as far as like, is it going up or is it going down? What's going to happen? My luck, I'm going to buy it and everything's going to come crashing down. It's like, does it make sense for you? You're not looking at buying a house as a 1-2 year investment as a homeowner. Like an investor, yes, we do have to take those things and anticipate those things. So it's also like why fixing and flipping is so much more risky than buying and holding rental property. And that's why you do have to do those analysis. But if you're a homeowner, it's like, is the right time to buy? It's like, I don't know. Are you financially stable enough to buy a house? Because the second you buy that house, that mortgage payment will hardly ever go down unless you do refinance it after a significant amount of time. So you have to look at it from that state. It's like, so should I rent or should I buy? It's like, I don't know. What's your rent payment? What's your mortgage payment going to be? Mm-hmm. If it's $1,400, I'd say keep renting, because you don't have, like, the house takes maintenance. Like, your house isn't appreciating. What's appreciating is the dirt underneath it with the asset. You have to maintain the house over time. You have to upgrade it. You have to put new roofs and you have to put air conditioning on it. You have to do all that stuff. When it's a rental property, you don't have to do that. So it should be substantially more to where rent is like $1,600 and I can go buy a house for $1,400. It's like, now you're starting getting in the realm where you might be able to afford that. And from an investor standpoint, you have to look at that aspect. Like, all right, if the market, how fast does the market turn negative and how fast does it go down? And if you're on razor thin margins and you're only expecting like a $20,000 profit going into the project, it's like, if the market does turn, can I fire sale this thing and get out from underneath it before the market completely falls out, if something like that does happen?
Right.
So you do have to analyze it and look at it from that aspect.
Well, and one thing that I look at, like, if you're a homeowner, asking yourself, should I keep renting or buying? My question to you is, why do you feel like you need to buy a home? Do you want to buy a home because of what purpose? Like, do you feel that it's an investment? Is that why you want to buy a home? Are you buying it because of tax shelter? Why are you buying a home? Yeah. Because you can rent a home that has all the same amenities. And could you possibly be paying a premium for the rent compared to a mortgage? And yes, I understand what all these gurus out there are saying, all the rent payments are gone, and your mortgage payment pays down your equity. Like, I get that. But when you add the cost to owning a home and everything, it's like I don't know if you're, over the course of time, yes, owning a home makes more sense. Equity pay down, appreciation, all of that over time. But then you have to make sure you can update it at that time to the current market requirements so you can sell at that profit, capture that equity. If not, that equity buildup did absolutely nothing for you. I mean, we've bought houses from homeowners that they're like, but I had $40,000 in equity. It's like, yeah, and you also have $30,000 in deferred maintenance. It's like your equity is gone. So when you look at all these things,
especially here in Texas, when it's like, we have shifty foundations, and if you can't afford to fix the foundation, you doing all the repairs around the house doesn't matter. Like, we bought one where they spent, I don't know how many thousands of dollars repairing the plumbing to the house because their things weren't draining right. It's like, It's your foundation.
And how messed up was that foundation?
And the foundation was significantly worse than what we even anticipated because we didn't realize the front of the garage was the high point. We measured the house like, oh, it only drops 3 inches front to back. Not that big a deal. We didn't realize like the kitchen dropped 3 inches from the front of the driveway.
Yep.
So like we had to lift the whole house up. And I mean, it snapped plumbing. And like, so we had to redo the plumbing that they just paid thousands of dollars to fix a year ago.
Yeah.
So
looking at it from that regard, I think I like renting for the fact that you're still more flexible in being able to, let's say, you know, you get a better job opportunity, a different opportunity opens up another side of town, whatever it may be, you're more flexible. With a house, especially if you're overpaying for a house and everything, it makes it that much more difficult for you to just pick up and move, you know, and do anything with it because chances are you probably owe what the house is still worth, right?
Yeah.
So you look at all those things, and then as an investment goes, we talk about this all the time. You need to do more. Obviously, a buy and hold. You should not buy a fix and flip if you're over leveraged. There's no margin there.
Well, I don't know. I've seen people do that nowadays because of the like, oh, the market's going to appreciate. It's going to be worth so much more in 3 months. Like,
Yeah,
I mean, it could, but it could also not be.
And then we get the calls of like, hey, can you help me? Yeah. Do you want to lose $30,000 or $40,000? That's kind of what you're looking at right now.
Yeah.
But what you need to make sure is you're cash flowing, right? If you can cash flow north of 250, and I'm talking about net cash flow 250 plus. That's including if you have property managers, that's including everything. This is your net cash flow. Then you might be sitting better because chances for rents to drop $250 for you to like be pretty much break even or negative.
Rents don't
very freaking hard to do. You know what I mean? Like rents typically don't drop, especially like, in the markets you're in.
What's going to cause rents to drop? Like rents are based purely on a supply and demand basis.
Right.
To where you would literally have to have an exodus of the area of people. Like you'd have to have a massive supply of new cheap homes on the market that everyone left renting and went there. Everyone stopped moving here and then turned around and left the damn city or state or wherever you're at. To where it's like, that's why rents are so stable and they might fluctuate a little bit, but not much. Like I'd highly doubt I'd bet money on that. Rents have never gone from 1 year to the next down $200 because even in recessions, rents tend to hold stable or increase because more people are wanting to buy.
Yeah.
I mean, more people are wanting to rent versus buy when they see housing prices coming down. So, or in this last one, it's like people like housing prices were accelerating. So where it's like, yeah, people wanted to get out like from close quarters and like they sucked up all the inventory for rentals too.
So the article actually continues, and he talked about, because he had talked about there's three things that are going to be affecting the rental market. And he said the third factor is the speed of wage increases in certain lower paid service industries as companies like Amazon, Chipotle, and Costco engage in arms race to staff warehouses, restaurants, and big box stores. While it won't affect luxury apartments in New York or San Francisco, the higher wages will empower landlords to raise rents, particularly in metro areas that are housing constrained. So one thing that we talked about, I want to say it was not last Coffee with the Johns, but the one prior to that, I believe it was episode 23. We talked about how Amazon is planning on doing a big warehouse on the south side of San Antonio. That kind of warehouse where the starting pay is already at $15+ an hour with all the stuff that they're doing. I think for Amazon, very strategic play. They're targeting like the employer pool is literally where they're building the factory. So I think if you own houses on the south side or are thinking about it, Amazon putting a factory there with these kind of pay raises, and as they keep raising their pay and everything they're doing, you have a pretty consistent rental pool down there that's going to be, I think, a hell of a decent rental pool. So continuing with that, he says, because renters often sign 1-year leases, cumulative rent increases. You know what I mean, all right?
Yeah,
guys?
we'll go with that.
You know what word that is. Rent increases will phase in over the next year as contracts expire and reset. For instance, imagine that someone in San Francisco signed a lease in September for $2,400 a month in an apartment that went to $3,000 a month before the pandemic. By renewal time, the rent for that apartment, which has been steadily rising by about 3% a month over the course of a year, has fully recovered to three grand. From the tenant's perspective, that represents a 25% jump all at once. So I wanted to ask you in this regard, either I'm misunderstanding the article or they do shit differently in San Francisco, but would you raise a tenant's rent 25% from 1 year to the next?
It depends on the strength of the renter pool, I guess. Or like if you think that you can immediately get somebody in there without having a month of vacancy, then yeah, maybe. But it's also like I think that's more for, and they say luxury apartments. So apartments obviously do things a little different than a single family house because they have multiple units, bringing in cash flow from all different types or different areas of the complex. For like a single family house, where like I couldn't raise rent on a tenant that's been, because there's also like for us, like we personally know these people.
Yeah.
We deal with them. Like if they have an issue, like I know their names. I've interviewed them. We talked with them. And we know their kind of their personal situation a little bit to where if they've been a good paying tenant, I'm not going to jack the rent up 25% at one shot. As like one, I just feel like, I don't know if I could sleep at night doing that to that many people, keeping them on the fringe like that. But it's also if they do move, well, now what do I got to do? I got to now take time away from my other business activities to go and clean the house, do any type of renovations, potentially missing 1 month of payments. Yeah. To where it's like, hey, you miss a month and a half of payments, you just lost all of your quote unquote rent gain for that. And there's no telling that tenant's going to stay there for more than a year anyways. To where like if I got somebody that's in the house that's been performing well, paying rent early, doing everything they needed to do, it's notifying me on time, being very communicative on things, like I'm not going to jack at 25%. But now apartments, they live in a different realm to where they will jack rent. I see that amount because they can afford those vacancies because they have somebody there on site managing that complex. That's their job, is to fill vacancies. They're not doing anything else but that.
Well, and also in apartments, you have the scale too of the apartment versus a home, right? Because the home, it's literally just that home versus an apartment complex. It's like the overall income of everybody, that pitches in. But the article goes ahead and concludes with, this has implications for the Federal Reserve too. In its June meeting, the Fed expressed a greater concern about inflation than it has in some time. While some of the conditions driving inflation this year will probably subside over the coming months, used car prices being among the most obvious, the press rents that were helping keep inflation in check will now be picking up. A rise in rents, which may accelerate in months to come, could lead to a new, less transitionary kind of inflation for the Fed to deal with in 2022. So it's something that you and I talked about. Inflation is not only coming, it's here. And how will the Fed adjust? And I think what we talked about in the prior article is extend the mortgages 40 years, 50 years, whatever. You keep mortgage payments low. You keep affordability available. And you can also raise interest rates at this point.
Well, it's one of the things, dude, because like used car sales and rents are two big components of inflation. And then you have food and energy costs and everything else. They strip some of the energy costs out and stuff like that. Or it's like, and you got used car sales jumping like I heard something yesterday, like 30% year over year for a used car. To where it's like, how did I buy a depreciating asset in 2017 and it's now worth more than what it was when I bought it?
Yep.
And it's because of these massive shortages. And the same thing with rents, to where I got a little thing here that the White House panned over tweet on prices of 4th of July cookouts. The White House is largely panned on social media on Thursday over a tweet that mentioned the decrease in cost for home cookouts this year during the 4th of July weekend. The cost of a 4th of July cookout, and the little caption was in the picture was, the cost of the 4th of July cookout in 2021 is down 16 cents from last year. And then the context above the picture was, planning a cookout this year? Catch up on the news. According to the Farm Bureau, the cost of a 4th of July barbecue is down from last year. It's in fact You must hear hot dog. The Biden economic plan is working, and that's something we can all relish. And several people,
very cute. Very cute.
some people came out and were like, "Are you kidding me? Have you looked at the price of gas? The average price per gallon is $3.15, 42% higher than it was a year ago." Given context of last year, I understand that, but they were significantly higher even compared to 2019. And Dan Price, the Gravity Payments CEO, also responded to the tweet saying, 16 cents? Really? Home prices are going up 24% annually right now. The median home goes up 16 cents every 1.3 seconds right now. Or like they're like, well, look, the cookouts are cheaper, but literally everything else across the spectrum is more expensive. To the point of like, yeah, food is in the inflation numbers, and those numbers might be down, whatever. But you look at the cost of lumber, you look at the cost of housing, you look at used cars, you look at energy prices. Like, okay, yeah, you fixed on this tiny little point that dropped 16 cents.
Well, that's what they always do, right? Don't they say, oh, food costs and all this, but they're always replacing what they consider to be food. Like if pork went down, then it's like, well, you should be eating pork. Why are you eating meat? If this went down, then you should be doing that, not this, right? So it's like they're always adjusting it to whatever suits, the narrative better. So that's where I look at, and I always like to look at not what the news is saying, but what people are doing, what we do, right?
Yeah.
Like just because, let's say, pork is cheaper, there's people that even it's against their religion to eat pork, right? Like there's a whole bunch of different examples with different types of food that's like, yeah, I get that's cheaper, but does not mean that I'm going to consume that. You understand? So my cost has gone up.
I'm just curious though too, because like I went and bought some steaks the other day, and I was like, my God, like 4 steaks was like $45.
Yeah.
I was like, and that's when I saw that down 16 cents. Like, what are you feeding people? What's the cost? What is your barbecue? Is it like rice tofu burgers? Like you just supplemented things down. We're like, we'll just get rid of all the expensive stuff, and you can have a rice tofu burger instead of an actual hamburger. So it is very interesting when I saw that, and like, and that's just politicians. Like that's not one administration versus the other, Republican, Democrat. It's just like it's politics of how they try to focus on these things, and it's like, come on. Like, get out of here with that stuff. You should have known that you were going to get that kind of reaction out of posting something like that. But
so what you got here?
Another thing I found interesting, like amongst staying on the topic of real estate, the new trend, and this is actually something out of here in San Antonio, of like the build to rent model versus like since housing prices are getting so high and people are starting to realize like, you know what, renting isn't so bad. As long as you got a good landlord and a good house and you're not get somebody that doesn't want to do any repairs. So the Atlanta company to convert student housing into single family duplex rentals. Where is it? Computer just froze. Sorry. An Atlanta-based real estate company plans to convert a student housing community into more traditional community, part of an $800 million effort to build single-family rental communities across the country. Rangewater Real Estate bought Aspen Heights, a student housing community built in 2011 over there on the northwest side of town by UTSA for an undisclosed price. The company is the company is rebranding the property as the Cottages at Leon Creek and will market the 284 single-family homes and duplexes for rent to the general public. The 53-acre community along the Leon Creek Greenbelt or Greenway includes detached 4-bedroom homes and attached 2- and 3-bedroom homes. Rangewater plans to fence in the private yards for every home, as well as update the common areas and renovate the units with new appliances, countertops, cabinets as leases expire. The purchase is the first of Rangewater's single-family rental arms, Satoria, which plans to deploy $800 million to build 15 communities in the Sun Belt cities. So this whole build to rent kind of model is taking off, where they took like, and that I thought about, I was like, that's genius, because like, where else do you find that many housing units that you can buy in one shot besides student housing, like the community like that, with 284 units that you can buy all at once and renovate? Because it's not an apartment complex. It's not a condo. The only other thing I can think of is like your condos that you could buy an entire condo regime and turn them all into single family rentals if you wanted to.
Yeah.
But like, it's like, yeah, those student housing developments that aren't dorms, that are just like your single family rental properties, but for student housing, you bought the whole thing, converted it into it, and especially the location of that, because you have Valero, you have USAA over there, you got Security Served Federal Credit Union, you got the RIM, Dominion, like a high income generating area. And as the traffic gets worse and worse and worse, people are going to want to gravitate towards those areas. So I think it's genius that they've kind of found that, because they said they've had to try to bid on other types of communities like that. And it's like, and they're not the only ones bidding on these. Like, there are a lot of money chasing this kind of model to purchase homes.
And it's something that we always talk about like why you want to read these articles, why you want to pay attention, because some of these bigger guys, they're definitely doing things that we don't think about. You know, they're doing investments that we haven't even considered, where it's like, I agree. I think that's genius, where it's a building is very difficult right now. Getting permits, getting approval by the city, getting all this is very difficult right now. So if you're able to do this with being able to buy, you know, a more distressed commercial property or something along those lines and convert it, I think you're getting a hell of a deal probably for what you're buying. And it's not something that you got to sit on for the next who the hell knows how long before the city allows you to actually go ahead and build it. So, I mean, yeah, I agree. I think it was, when I heard that, I was like, holy shit, that's a very genius business model.
Yeah.
If you can find the properties, but very smart.
It really is. So, I mean, it's something that was very interesting that I kind of saw. But to go along with that, and this is something I'd propose to people that, hey, if you could do a little research on it, because I tried to find it and I can't figure out when it is. So lumber prices dive more than 40% in June, biggest monthly drop on record. Lumber futures tanked more than 40% in June alone, suffering their worst month on record dating back to 1978. At their peak on May 7th, lumber prices hit an all-time high of $1,670.50 per 1,000 board feet on closing basis, which was more than 6 times higher than their pandemic low in April 2020. The quick reversal of lumber months-long rally came as Americans started to go on vacation again amid the economic reopening instead of taking on renovation and building projects. This drop suggests that the cause of that inflation was the mismatch of supply and demand will not last forever. At one point, the lumber shortage led to the average price of new single-family homes increasing by nearly $36,000, according to the National Association of Home Builders. The red-hot housing market also saw a record shortage of existing homes available. In April, about 1 in 4 homes for sale were new builds, the highest share ever. Historically, new homes make up about 1 in 10. Recently, there have been signs of the housing boom fizzling. Weekly mortgage demand fell 6.9% last week to the lowest level in almost a year and a half. Now, lumber futures prices are on track for their 6th consecutive weekly loss, wiping out all of their 2021 rally. The price fell another 6% on Wednesday to around $710 per 1,000 board feet. Currently, as of this morning I checked, it's at $764.30. My question is, okay, I understand that this is just the paper future market of contracts, so people are losing money, so that's not what Home Depot is actually executing. The mills are actually executing these contracts at. Mm-hmm. But they are loosely tied together. So when or how long does it take for when you see these futures drop off to when prices of actual lumber that the consumer, you and I, would go buy? Does it take a month? Is it 6 weeks? And how closely do they drop? Because like with that massive amount of drop going from 1,600 down to low 700s, like you think that would roll into, and they're saying it's just a supply and demand issue. Like, so when does OSB, which was $10 a sheet before the pandemic, that's now $50 a sheet, when does that price drop back down to, I don't know, 20, 30 bucks? How long does that take? What does it take? And
so to answer that question, I covered an article. This was, again, a few weeks back when lumber prices started dropping. They went from 1,600 down to like 900 or something. And one thing they said that they were expecting by around, and this was that drop back then, it would be around July timeframe, July, August, when the consumer would actually start seeing that. But they're saying that if any increase happens from that moment till now, we won't see that drop happen because a lot of these suppliers and everything are going to hedge against this new rising price. So they're not going to drop the prices just because the futures had dropped a little bit. So that was something that they talked
Well, I
about
mean,
in that article.
We're going to find it out firsthand now because like our new build is cleared. We do have permits for it, and we are going to be buying lumber packages in here in the next couple weeks. Like I have the takeoff now. I'm going to start sending it to builders, lumber yards to start bidding the project out. We're like, yeah, I'm going to bid it out now, but I'm also going to bid it every 2 weeks or like until we actually purchase that lumber package. And it might be beneficial. It's like, you know what? I'm just going to buy a little bit at a time. I'm going to buy, hey, I'm just going to get the first floor, then we're going to get the second floor, and then I'm going to get OSB later. Like, I'm going to buy it in stages out instead of trying to prepay everything up front. It's like, hey, with prices starting to come down, I'm going to constantly be bidding against all of the lumber yards to see, like, hey, have your prices drop, have your prices drop, have your prices drop, and move that along. Because I don't want to hold off the build, but it's one of those that when you see that massive of a drop and continuing to fall and not spiking back up.
So let me ask you, because that was one thing too that we saw when we were trying to get the takeoff done, which we take it to one of these lumber stores, and they pretty much tell you how much of each you're gonna need, nails, everything, right? To tell you pretty much what type of lumber package you should be buying. They were, what was it? They were behind by quite a bit, right? I mean, what do you think was causing that delay in all these lumber companies?
It's a really good question. I have no idea what was causing these things. Because I mean, you walk into some of these stores and it's like there's tons of lumber. Like every time, I never went in. Like, yes, when I walked in like Home Depot, I noticed like all the doors. There's no doors there, but like when you walk through the lumber section, they're not bare. The shelves aren't bare. I mean, there's stacks of OSB across the top. Like people are still buying it. So like I never knew like who had it or where it was going. I don't know. It was a very interesting phenomenon. That's where I'm just kind of curious. Like, are they going to drop like a rock too? And when you're talking, like, hey, we're not buying a 2x4 to build a house. We're buying hundreds of and all different types of lumber to build these houses. Like, yeah, if it's gonna have $36,000 in costs, like it drops in half over the course of 2 weeks. Yeah, I got to pay some interest, but I'm not paying $18,000 in interest over 2 weeks. So it's worth just like holding off. It's going to be very interesting to balance that act.
Yeah.
So I don't know.
Yeah. And then here's something that I was interested in. When you look at all this, right, and we talk about the housing shortages, and we keep hearing about Fannie, FHA, all these products, everything, the administration is trying to make it more affordable for people to buy homes, all of these things. But yet we are yet to talk about how to make home building more affordable by lowering regulations, by lowering, these ridiculous costs and delays that it takes us to even begin to break ground.
Yeah.
And one thing that you and I have spoken about before is that we're not asking you to remove the regulations on is the home safe, the inspection process, none of that. We're just saying if you make the regulation at least cheaper and faster, then we would be able to actually build more homes to sustain this affordability. And then when you're worried about affordability being an issue, guess what? Adding more inventory to the market actually helps that. If we can drop more properties into the market, that's going to help affordability.
Oh, drastically.
So why is nobody thinking, or do they just not care, or is it not hitting them? Why aren't politicians, not people, why aren't politicians doing this for the build community to try to lower regulations, lower all the pre-construction shit that is causing so many problems and so many issues to the housing inventory, to this market that we're in? I mean, that's what I'm curious about.
I don't know, because that would be the logical solution. It's like, you need more housing. Like, why did it take me to buy a freaking lot 4 months to get cleared? And it wasn't because I was moving slow. It's like, no, because of your regulations, because of your stupid zoning laws, because of your stupid boards, because of your timelines, because of all these factors that are on the freaking municipality, I had to wait 4 months to get this house under. Because where I planned, we could have had this house on the market by now and sold, and if profitable, going to buy another land and go maybe 2-3 more lots, because we've now got a process in place to build more houses. But now I got to wait another 3-4 months to figure that out.
Yeah.
For ourselves. So where it's like, us having that ability to build. Like some of these regulations, some of these, like you have to have this fail safe on top of this fail safe on top of this fail safe, so this doesn't happen. It's like, my God, the cost that you just raise the house because of all this extra stuff that I have to do across this entire freaking house, that like it just makes it ungodly expensive. Or if you I'm wondering when that's going to happen, when they deregulate some of these industries and these building things. Because exactly, because you saw it once they deregulated the airlines in like the 70s or 80s, whenever that happened. Like now the cost of travel, like you saw it over the course of the next several decades when like it drastically went down compared to what it cost before, because the politicians got their hands out of the damn process. Yeah. So there's all kinds of industries you see where once they deregulated them, capitalism took hold, it brought prices way down for the consumer, and everybody was better off over the long run.
Yeah. But, well, I mean, even if we talk about or try to cover like, oh, we need the regulations, we need all this, because, you know, if not, these builders get out of control. How many times have we seen like these older homes are built tremendously better than these newer homes are being built with all of these regulations in place?
Oh, yeah. Prime example. Just go look at something built in the 50s here in San Antonio, and then go look at something built in the freaking 70s in San Antonio, and look at the amount of repairs that you got. Yes, you might have to modify the 50s house to make it more compatible to today's standards.
Yeah.
Just because, you look at the structure itself, the foundations, the type of framing, the wood, everything. Like, it's much better. The bones of the house are so much better. You might have to update the electrical and things like that, but you look at these houses built in the 70s, and I mean, you walk through it, and it's like one of those crazy houses that just like you just feel the wave in the floor just dipping from one side to the other.
Yep.
And it's like, because the politicians got into it, and like, we're going to make everything safer, and it's like, well, we had to bring down costs in order to meet demand. We had to cut corners everywhere else to make a house that we could sell for the demand that was there.
Well, we have Rob Johnson comments that he says he's seen on TikTok videos. If it's on TikTok, it's true. But he's seen on TikTok videos where the lumber is in warehouses and they're just not moving it out to the general public among other goods and materials. So I could see that, where it's like, well, hey, we have the lumber. Maybe lumber prices have dropped for them picking it up, and they're just holding on to it, saying, like, let's keep the scarcity going.
Well, it's one of those things, too. It's like, and eventually that does pop. I mean, it's like the people, like, they hoard things. Like, oh, prices are going up. I'm just going to hoard it. I'm just going to keep it forever and wait till prices go up higher and higher and higher, and then sell it off later eventually. But now prices are falling, where I could see, and that's talking about, like, a massive drop in prices, because now all this inventory people were holding and holding and holding and holding, trying to wait to sell, and then all of a sudden, boom, bubble pops and everything falls drastically. Everyone's like, oh shit, I don't want to catch a falling knife. Sell. I mean, it happens in everything. To me, you saw it in the tulip mania back in this whatever decade or century that was. You saw it in Bitcoin back in 2000. You just saw it recently, to where like you saw it in the stock market. You see it in everything. It's not just those online things. It's a part of the real economy that people hoard things and trying to get a better price. And then somebody starts that cascade, and then everybody sells it, and prices drastically fall, like you saw here in the markets for futures of lumber.
And that's something that, if you are interested in understanding these things further, like, you need to get yourself behavioral economic books. Behavioral investing, anything on behavioral, because I believe, I've been saying this for quite some time now, that I don't believe we're anymore in technical investing, technical stats, technical anything. I think the majority of what drives the market is behavior. Ever since the introduction of social media, right, into the mix, you're able to pretty much speculate on just having the masses do this. You know what I mean? You have so many people that are grouping together, and we saw this with when they shot up on GameStop and they were hitting all the hedge fund companies. We've seen it, like you said, on Bitcoin. Bitcoin has no damn reason in hell to have gone up as much as it did, except for the emotion of people saying, "Oh my God, this is trendy.
Don't even
this
talk
is cool."
Bitcoin, talk Dogecoin.
Yeah,
like that. That is like, you look at the comparatively. It's like, what are you doing with that?
Yeah.
And it's so, I mean, I think it's exactly that. The behavioral economics, for sure, is like, that is what that's what makes everything worth something, is the behavior of people believing that it is worth something.
Yeah.
Or, I mean, why are tech stocks worth more than like these costs, like Home Depot stocks? Why is the valuation of a PayPal bigger than like the 4 largest banks?
Yeah.
And it's like they're just a digital platform that processes payments. So it's like it's because people believe that because it's a tech company, because it can expand, because it can do XYZ, that it is worth more. So,
Yeah.
The people, if you are enjoying this content, please, we'd love it if you gave us a like. I see that we got 23 people watching, only 10 likes. So those of you that are watching, let's put a couple thumbs up in there for me, please. I like the thumbs up.
There you go. Well, while you're at it, might as well just let you guys know, if you're interested, if you live in the San Antonio area, we are doing a workshop in August. So far, we're thinking about the 2nd to 3rd weekend in August. It's going to be a 1-day workshop on managing rehabs. So this is paid. Okay, it is live. It's going to be probably, I don't know, we're thinking 3-4 hours maybe, but we're going to go over everything that has to do with rehabs, with managing the renovations, construction, contractors, everything. So if you're interested in that and you're a rehabber or buy and hold investor handling rehabs, you're not going to want to miss it. Text the word workshop to 210-794-9898. And as soon as information comes out, the signups, everything, there's going to be, for our text community, there's going to be some pretty good discounts. So you're definitely going to want to make sure you jump on that as early as possible to get those discounts for the workshop. With that being said, I wanted to actually move on.
On that real quick. One of the comments that we got here from Capitalist Pricing Model, the cure for higher prices is higher prices. The cure for lower prices is lower prices. Economics 101. I was like, what brings prices down? Even higher prices, till eventually everything just collapses and it brings prices way down.
Yeah. Yeah,
So,
excellent point. I read an article that over 100 California headquarters have moved to Texas since 2018.
Boom, baby. This is our Rag on California segment?
Yes.
Excited.
Yes. This is going to be the California segment. We haven't been picking on them for, I think, a few episodes, so let's get at it. What's crazy, though, is in the state that came in second place was Tennessee with 21. So California is a number 1 by 100. Number 2 is all the way down
Texas
to 21.
Texas is 100.
What did I say?
California.
Oh, okay. So Texas is number 1, with California companies moving to Texas at 101.
Wow.
And Tennessee is number 2.
There's that big of a difference?
Yep.
Like,
It's insane.
It shows where people are moving. Like,
yeah.
over 80 more companies moved to Texas than the number 2 in Tennessee. Like, that's crazy.
They're talking about, so this guy is like, they're predicting the future of California business departures is a two-way issue. One school, that wasn't a comma or anything. One school of thought is that the companies that are motivated to leave have gone by now, and the others are diehards. They're going to stay. So the other side of the coin is that, yes, companies will continue to consider leaving because there is no evidence there will be a single regulation. There will be a single regulation that will ease or eliminate the state of California, which is run by business hostile or business ignorant legislators. Most of them have never had a business. They don't know what it takes. I expect that will get worse. There's also will be new attempts at tax hikes in future years. So that uncertainty and that worry of, and we've seen it, we talked about it, how California, even during the pandemic, are continuing to hit businesses even harder. So with taxes and stupid amount of things and regulations. So in this interview, the guy was asked, why do you think that so many California companies are choosing Texas as their state of choice for headquarter relocation? So there are basically 3 reasons. First one is taxes. The tax burden in California is ridiculous. It's hard on companies and hard on individuals. Not only is there the fact that Texas is a no-income tax state, reducing the taxes for individuals, but even in competition with other states, California taxes on middle income earners is way out of proportion. The person earning, let's say, 50 grand in California is paying way more in taxes than they would be in Pennsylvania or Virginia or most other states. The number 2 reason is the harshness of regulatory environment. California can be in California, you can be sued if you're an employer for having an error on your paycheck stub. So if the employee got paid the right amount, got paid on time, everything's fine with the check doesn't bounce, but there's an error on the stub, you can be sued by the individual employee. You can be subject to a class action suit, and you can be fined by the state.
My God.
So
and to that point, like, California lawyers love to sue.
Oh, yeah.
You have my girlfriend's father was in the prison system out there, and they said he's just kind of your typical lawyer that you see on TV. Everyone was like, "Oh, lawyers are all scumbags and stuff like that." You had those like bottom feeders that would just like get in there and just enrich themselves off the taxpayer dollars to somebody that's serving a life sentence in prison for all kinds of like wrongdoings. But it's like, oh, they didn't get some kind of thing on time, and some lawyer gets in there and sues the prison system, which is run by the state, which is then taxed by the people that are just like this. And so you have all those type of people just looking for, oh, they didn't put that period right. Like, I'm John Barr the third, but they forgot the third I, so it looks like I'm I'm class action lawsuit.
Yep.
Like,
that's a different John.
Man.
So talk about hurting businesses. And then the third reason is this one has really risen in frequency, and that is the quality of life. People tell me that their employees tell them they want to get their kids out of Los Angeles Unified School District. Crime in California has been pretty bad for quite some time, but within the last year, it's gone to unimaginable proportions. District attorneys in San Francisco and LA are now letting people go if they, for example, shoplift. If what they shoplift is less than $950, there is no charges filed. There are all kinds of crimes being committed for which no one is going to jail. I mean, you pretty much have given people the right to be criminals and steal and cause hardship because $950. Okay, they're like, oh, that's a petty crime, whatever it is. But to a business owner that's constantly getting hit at $950 every time and they can't do anything about it, that'll tank your business.
Well, that's what said. Like, what was it? 23 Walgreens in the San Francisco Bay Area have just completely shut down, and they specifically said it's because of the crime rates, like the cost to run that business and the amount of for security, so the products don't get stolen. And then now for these things, to where it's like if the security guard stops the person, that person can sue the security guard, which then sues Walmart. It's like no. They're just like, we're just going to shut the stores and we're leaving the industry. I mean, that video went around on social media last week where a guy rode his bicycle into Walgreens with a black trash bag, filled it full of products, and then just rode his bicycle out the front door.
Yeah.
Or like, that's absolutely insane.
Yeah. So what I found interesting is piggybacking on this article, why I wanted to hit on this now is we actually have a YouTuber running for mayor of California, which, like I said before, you know, with all of the other clowns that are running for mayor over there, governor right? Governor of California. It just makes sense. Why not have a YouTuber? So Meet Kevin is he has a YouTube show that he does, and he's a real estate agent in California, and he has a very successful YouTube channel. And he is going to be running for governor of California because he's fed up with Newsom and all the policies that are happening. And he's starting a 10-day rally July 2nd. And the rallies will be held over the course of 2 weekends. He will use these rallies as opportunities to present his 20-point plan and answer questions with town hall style Q&As. You can see his whole plan at his website, meetkevin.com. At the start of each rally, Meet Kevin and the campaign will distribute campaign raffle tickets for free, which will enter attendees into a giveaway for free cash prizes, $100 to $500, t-shirts, hats, and other campaign products. There's also going to be clowns doing puppets and face paintings. Fucking clown. Meet Kevin will solve our state's homelessness crisis, educational system, unaffordable housing, and lack of transportation infrastructure by declaring 4 states of emergency on his first day in office. Meet Kevin will end homeless. I find it funny that they keep calling him Meet Kevin. Will end homelessness, living on the streets. Yeah, homeless. Oh, we'll end homeless living on the streets in 60 days, utilizing the National Guard. The National Guard will be charged with providing compassion as well as building 80 emergency facilities to house and care for our homeless population. Kevin wants to overhaul our educational system to teach students practical skills by creating future schools. A combination of high school, college, and vocational school. Future schools teach the abilities that job market is looking for, business communication skills and financial education, so graduates can start their careers at 18 debt-free. Future schools will also provide those over 18 with $2,000 a month so they can attend school while getting paid. Housing costs are at all-time highs in California due to underdevelopment. So Kevin will make housing affordable by promoting the development and commercial conversion of 500,000 new units annually until supply can catch up with demand. Additionally, traffic is bleeding our economy by billions of dollars each year. Optional toll roads along and tunnels under existing highways of cars, trucks, and buses will help alleviate traffic and pay for themselves. California also has one of the highest costs of living anywhere in the United States. Eliminating the state income tax on the first $250,000 of income will effectively give the average Californian a $3,100 per year pay raise. So those are some of his plans.
Pipe dream.
Well, so that's what I wanted to kind of discuss with you and see what your thoughts are. So one thing that I do like is, to the point of the previous article, nobody that's in politics there has ever ran a business or anything like that, right? So it's like they can't relate. Kevin does. He has his own business, YouTube channel that he runs and everything, and he's made I think he makes like a couple million a year just off the YouTube channel.
I was looking it up right now. He's 29 years old, and he has an estimated net worth of $32 million. In September of last year alone, he made $290,000 estimated from his YouTube, but he also has lots of real estate as well because he has affiliate links and partnerships as well.
Yeah. So you have this. So I'm like, okay, well, that's good. But here are the things that kind of jump out at me, and I want to see like what you guys listening, what are your thoughts on this? But these 4 states of emergency, that to me sounds a little bit more. I want to choose the right word because I don't want us to get banned. But 4 states of emergency sounds a little dictatorship in a way, right? Like we're going to declare states of emergency, bring in the National Guard to take care of these issues. Like, what does that sound like to you? I mean, am I just interpreting it wrong? I mean, what do you think?
Well, I mean, we've seen that with prior administrations, the current administrations, that they rule by executive authority in states of emergency and stuff, like, because they are given extra powers. And one thing is, like, it's also, I think this is just I think it's a smart play by him because he's a celebrity on YouTube. So now he's in front of a national TV screen and everyone goes, who's Meet Kevin? And they find his YouTube channel so he can grow his YouTube channel, grow his income that way. I don't think he's actually, he's running for governor, but I don't think he's actually has a chance at it. It's more of a publicity stunt to gain more followers because now it's like, oh, you don't have to go on YouTube and accidentally stumble across him. He's being put in front of TVs. He's been being put on podcasts. He's been put on all these different news channels because he does bring eyeballs to him. So he brings a followership. So they put him on TV so people can watch, and then he finds new followers to grow his base. That's my take. But
so you think that the bigger play here for Kevin is not to actually become governor, but it's just for the publicity and everything.
Oh
that
yeah,
he's
you
getting.
look at his states of emergency, the things that he's going to. It's the biggest things that people complain about in California. You have the homelessness crisis. You have the educational system. You already said in our last article, people are wanting to get out from the LA school system. That's why they're leaving. Then you have the underdevelopment of housing there. So that's another crisis because housing price is so high. And then the other one being that the cost of living. So we're going to bring the cost of living down. So it's like, yeah, that's what everybody runs on because that's your biggest issues in California.
Right.
So he says, we're going to fix all these in the first 60 days, 100 days. So it's going to get people in to see like, okay, how are you going to do that? What's your actual plan? And they're going to find him and they're going to grow his usership. I mean, it's a very smart play on his base. And I bet his YouTube growship is going to grow exponentially because of him running for governor.
So it's kind of like when those people get on Shark Tank with no intention of doing a deal, but they get that kind of free publicity of 2 million eyeballs and everybody.
Exactly. I think that's exactly what he's doing here. Because, I mean, he's 29 years old. And, like, you run into, it's not a dictatorship. You get in, it's to the governor. And, like, you have the state Congress, which is all Democratic all the way across, who all has to agree on these things and pass these things to where, like, you can declare a state of emergency, but Congress can undo your state of emergency and remove your executive power.
Right.
And they have a supermajority against you. So they're going to take this 29-year-old multimillionaire against the Congress of California, which I'm betting the average age there isn't in their 30s.
Well, and you
they're
have
probably
Pelosi
in their 50s and 60s.
You have Pelosi that sits on on pretty much controls the whole government right now.
Yeah,
and she's in California. She's probably gonna be like, no.
Yeah, it's like you would be put in there, and then the powers of the governor would be stripped. I mean, you saw Schwarzenegger try to do this in the 2000s.
Yeah.
And it's like he tried to take on like the one of the school districts to get some things changed, and he wound up losing it because of, like, they are very powerful. Or like these state of emergencies to fix all these things. You're going to overhaul the entire school system. Like, people have been trying to do that for years.
Yeah,
and it's like, and they're not.
One of my biggest issues, again, with even though I agree that I do like the fact that he is a business owner and everything like that. My biggest issue is his age, to be honest. I've listened to his videos and stuff like that, and I've seen him on a few interviews. He's arrogant as all hell. You understand? Like, this is a kid that he has not been smacked in the mouth once in his life. You know, he doesn't know what it is to, like, struggle, to have, you know, any kind of life lessons. And one thing I notice is that people nowadays are not like 30-year-olds, 20 years ago. 30-year-olds nowadays, a lot of them are dumb as fuck. Like, I mean, they're beyond stupid as far as, like, just common sense, common knowledge and stuff like that. It's like, yeah, he made money because he's an influencer, right?
Well,
he's a YouTuber. So it's like, okay, you made money, but do you have the humility, the tactic, the strategy to be a politician?
To be beat up by politicians, like, that's a very nasty, mean business. And that's the thing, like, his income would drastically drop because he makes it from YouTube. Where, like, he's not going to be sitting in the Oval Office doing the opening bell of stock market like he does now every day from the governor's office. It's like, that's not going to happen. His income would just drastically fall through the floor. That's why I said it's a publicity stunt to get in front of more people. Or, like, and it's also like his money. Like, I remember reading, like, figuring it out just by seeing through the lines. Like, he's a hustler by no means. I'm not downgrading that he was given a silver spoon or anything. It's like, he worked his ass off, but his real estate success was because of his wife's family were real estate developers prior. That's where a lot of his real estate success came from. Is like was making money in YouTube, put it into real estate, and his wife's family renovated the properties and managed properties. So he had a lot of opportunity from real estate because you can make a ton of money in real estate in California, especially when you have the money like he had. So that exponentially grew his net worth in that aspect. That's kind of how I read between the lines of it. But that's right. Like, I think it's just.
Well, I mean, to what you said before, I actually do think that he would continue his YouTube show as governor, of saying, like, hey, I'm going to show you the inner workings of our political system, and and look at this thing and look at that.
I mean, it would be interesting.
It's his nature to do so, and to kind of be more attractive to the people voting. It's like, I'm gonna be completely transparent by showing you
Well, I think that would be a very
Right.
interesting aspect of it, to where like your average congressman in the for the U.S. government is like 60 some years old,
Yeah.
or like the youth,
Oh, shit.
the youth are like drastically underrepresented in Washington, and we're like somebody young being able to win, like, and then expose like we're gonna hold these SOBs accountable.
Yeah.
And like now you got a young cat in there that's got a viewership of a lot of young people across the entire nation that's gonna come in here and say, this is how our generation wants to run.
So
The old generation is different. We're gonna do things differently now.
what I think it's smart that he's doing is that he's running as a Democrat. Because if he ran as, let's say, a Republican or an independent, he would not get any TV time, any attention. Like, he would be just completely disregarded. As a Democrat, he's getting views. He's going to get more reach. He's going to get more, I don't know if they're going to be doing debates. I don't see why Newsom would allow any debates. But I think him choosing to be a Democrat is a great play on that regard, whether he is one or isn't. Where I think that's going to play against him is that some of the policies and stuff, you kind of go against a lot of the big Democratic plans that they have and they've put out in California that has been voted on time and time again by keeping somebody like Newsom as governor for I don't even know how long now. You understand? So it's like, I think it's like, yeah, you made a good play because you're going to be able to make some noise. Now, are you going to be able to make enough noise to matter? I don't see that happening. Are you going to make enough noise to boost up your brand and give yourself, instead Ian had put in here that he made 6.2 million last year. So, yeah, I'm sure now you're going to make enough noise that probably your next year's YouTube income probably doubles, right? Because more people know of you and all these things. And I think there are going to be more people that relate to his policies and say, wow, that's great, right? All that being said, it's like, yeah, I think this is an attention grab. I don't think he is serious at all of actually trying to win or any of this. Maybe he is. Who knows? All I know is California is very entertaining and make fun of. And I think this just keeps adding to it. And it's going to be very fun to see what this next election for governor looks like. Especially, isn't Newsom supposed to be voted out?
No, he's not voted out. It's a recall. That's why he's running against him. It's like they're forcing a recall to where he has to be voted in again, and to see like, do the people of California want him, and it opens up to everybody. That's why like he's one of like 100 some plus people running for governor, and like that's why like I highlight, my bet is like Newsom wins by a landslide because like nobody knows anybody.
Yeah.
And if you look at the ballot, it's like, my God, there's like 3 pages of people on here. Like most people are like, I don't know, we'll just stick with the status quo than any of these other people. But I don't know if they have.
So there is no way that Newsom can get pretty much beat out.
I mean, he could be for sure. Like, Schwarzenegger won, but he was also tied into politics back then because he was married to one of the Kennedys, and he was a superstar of like is at the height of his career pretty much.
Oh,
in those
huge
2000s.
actor,
yeah.
He had the whole Hollywood, everybody.
Oh yeah, but like to Molly's point in here, but once he got voted in, pretty much everybody fought him every step of the way because he was an outsider and he tried to change things for the better.
He tried to be a Republican.
Yeah, no, he ran it. Yeah, he ran it as a Republican.
Yeah, so
but I don't know where it's going to go, but I mean, he can be voted out, and it's very curious to see if they have one like what do they call it here, where you have the runoffs, to where if the one person doesn't win over 50%, then the top people compete against each other, and they do another election again. So that's happened here several times with the mayoral elections, where it's like, hey, we're doing a runoff. It's number 1 versus number 2, essentially, that go, and now you have to force to pick one or the other. Right. Where I don't know if that's the case. Now, if that is the case, now there could be a chance that Newsom does get recalled because on the second election run around, because then there's only 2 people to choose from. But it's not like you have the primaries where it's only one candidate gets voted all the way through the process, and then you have 1 or 2, 3 people competing based on party's affiliate.
Yeah.
Or now it's no, you have 100 people running against Newsom, to where like if that'd be the way I could see him getting voted out. It's like they have the 50% rule.
The 50% rule.
But I have no idea if California runs that way or not. If they weren't, then I'd be like, yeah, it doesn't surprise me. But we'll see.
So, what do you have on for the docket after this?
I mean, I got a little bit of business news.
Let's go.
This will actually help you, make you happy. The judge dismisses the FTC and state antitrust complaints against Facebook.
Okay.
So 48 states did sue Facebook based on antitrust violations for monopoly tendencies, and that got thrown out. A federal court on Monday dismissed the Federal Trade Commission's antitrust complaint against Facebook, as well as a parallel case brought by 48 state attorney generals, dealing a major setback to the agency's complaint, which could have resulted in Facebook divesting Instagram and WhatsApp. The court ruled Monday that the FTC failed to prove its main contention and the cornerstone of the case, that Facebook holds monopoly power in the U.S. personal social media network market. Although, this is a quote from them, although the court does not agree with all of Facebook contentions here, it ultimately concerns that the agency's complaint is legally insufficient and must therefore be dismissed, reads the filing from the U.S. District Court of the District of Columbia. The ruling is not necessarily the end of the case. The court acknowledges that the FTC may be able to cure the weaknesses in its argument, so it left it open for the possibility that it could file an amendment to the complaint and continue the litigation. So they kind of said in the article, they made it sound like the FTC thought the court would just rule in their favor because they're the federal government and they're the FTC and they had all these states going against it, that they're just like, oh, antitrust laws. And they're like, yeah, but you didn't really prove anything, though. You thought we were just going to blindly side with you. Like, you need to get more proof in there. And that's one thing they said, like, we don't agree with Facebook. We just disagree with you. Or like this. So therefore it's got to be thrown out.
And that's what's good with the justice system in this regard is that, hey, you actually have to prove a case. You can't just throw a claim and that's all you need. Because if that was the case, then shit. There's a lot of businesses that are kind of screwed. But I mean, I'm in the same boat. To me, it's like, I'm not like in favor or against Facebook. My thing is that kind of blatant control of just like, we don't like you, so here's a lawsuit and we're going to shut you down and break you up. It's like, okay, how about there's some actual proof or some actual reasoning behind this as to why that needs to happen? Because if we talk about monopolies, I mean, the board of realtors, how's that not a freaking monopoly? You know what I mean? Like you want to get a license or sell a house in any other city or whatever, you got to be a part of that city's MLS system and pay those dues and do this thing.
It's not a for-profit business.
Right. I'm sure. Definitely sure it's not a for-profit business. But you look at all that, it's like, how the hell is that not a monopoly? How the hell is like, let's look at Amazon, right? There was an article that I wanted to get to that I just didn't have the will to read. But Amazon, you have how when they bought Whole Foods, a few years back, what was the plan at the point? And right now, Amazon is controlling like every aspect of everybody's lives. They've built these distribution centers. They have the planes, they have the trucks, they have the vehicles, they have the delivery systems, they have everything. Then they bought a grocery chain that's like, now they own groceries as well, where it's like, now you buy groceries, you buy your goods, you buy everything, you watch TV, you listen to music. You have everything under Amazon. Amazon controls literally all aspects of your life.
Yeah, I mean, it's like try to go a day without touching something managed by Amazon.
Exactly.
Like,
so how's that not a monopoly, right? Like that. That being said, I'm not against Amazon either. I'm just saying, like, you look at things like this, and you're saying Facebook, and I look at Facebook, but then I look at something like TikTok. I look at something like like YouTube, like LinkedIn, Twitter. Like, I don't know. I don't see Facebook as being the the only one out there.
That's what the argument said. Like they said that they didn't prove actual financials to it, and they didn't put stuff to it. But they said they left it open. It's like, hey, like by no means are we defending Facebook. We just said your argument doesn't hold legal valor, so we're dismissing it. But you can go change it and amend it because like Facebook was trying to say, well, the FTC approved us to buy WhatsApp and Instagram in 2012 and 2016. Right. But they're saying like, yeah, but there's nothing that says they can't reverse their course based on something that happened. It's like that was 5 years ago. They're like, technology, the world, everything changes pretty quickly. And especially in a 5 years time, we're like, yeah, you can go back and amend your decision and go back and try to go against it. But I agree too. Like I think Amazon's by far more of a monopoly power than like especially an impact as far as the world goes than Facebook. Yeah. I mean, you can turn Facebook off, but like you really can't get away from Amazon.
I still rather them go after the board of realtors. To me, I've been saying this for a long time. I think the majority of realtors are useless. That being said, them controlling all of the data, how you can perform, how you can do everything. They're the ones bringing pretty much all the regulations and everything against wholesalers and investors because it's taken from their pound of flesh that they want to get. And it's like, it's one organization controlling the whole real estate market.
It's not one organization.
Okay.
Like, it's not the board of realtors. You have
NAR?
hundreds of boards of realtors. Like, you don't just have one board of realtors.
But it's not NAR?
Huh?
NAR? National
No,
Association
that's
of
just
Realtors?
no. That's just an association.
Okay.
That's not the board of realtors.
They don't control that?
No. Like, that's two separate. Like, you have the National Association, you have Texas Association of Realtors, you have National Association of Realtors, you have the SABOR, you have
They're
ABOR, you have
completely different.
Yeah, those are all different. Like, they're like, that's what's like, it's a very diverse. Like,
So the board of realtors is not like you having to be a realtor is not based on the board of realtors. That's just, it depends on every state.
And city. Like, that's
So
like, I can
a
list
city could get rid of realtors if they wanted. Like, you don't need a license.
the board of realtors.
Mm.
Yeah, you could abolish the board of realtors, but then that
city.
Of that city. Like, a SABOR could just be like, we're just going to cease to exist. But then there goes the MLS system too. So it wouldn't.
Who's the MLS system controlled by? By SABOR?
Yeah, by SABOR individually. It's not controlled by board of like national boards of realtors, and there's associations of realtors, not boards. There's not a national board of realtors, a Texas board of realtors. Those are just associations.
So the National Board of Realtors, or NAR, has
National Association of
the
Realtors.
National Association has nothing to do with all the other boards of realtors in other states.
No, that's just a voice. That's just an association. Just like you have the gun right National Rifles Association.
AARP? No.
No, the Rifles Association and stuff like that. Like, they represent the interest of firearm owners as a collective, as a big voice to influence policy.
Okay.
To make sure they're protection for that industry. Yes, they are the ones coming against those people because they are taking the pound of flesh from their members. So they're there to protect their members and the consumers. But I said there are a lot of people because there's even worse wholesalers out there than there are realtors in my mind. Where I think they cause way more damage than what a realtor can. To somebody's life. Or like they are doing it and to protect the end consumer and their association members.
Okay.
To where like because technically I could list a house in Austin on the San Antonio Board of Realtors. You're just not going to get anybody to see your house because that's not where the people are looking. Because like even in Seguin, I can list a house because that's when we go to Seguin. I like what major MLS systems out there. You have like 3 of them, or between here and Austin, you have 3 different ones that you can list on. Or if you go up to like San Marcos or New Braunfels, like you're going to get houses listed in Austin and SABOR, and then you have like 3 Rivers or something out there too. So like there is competitiveness against them. It's just like, hey, if you want to access our MLS system and our buyers and stuff like that, you do need to pay our board fees.
Mm-hmm.
So
okay,
I think there is a competitive. Like I do agree. I still think the board of realtors are like they don't provide a lot of service and they're more of a burdensome. Where I think you could do a much better job getting things listed.
Yeah.
I'm by no means defending the board of realtors because I do think they have kind of a little monopoly to like, oh, if you want to sell a house, you got to list on our thing. But their defense is like, yeah, but you can list on other places too. And I think it's I think it's a good barrier of entry to keep just from everybody wanting to be a realtor like they already are, essentially. Where I'm not a fan of the boards, but I do understand like kind of their purpose a little bit.
Yeah.
But I think they're very old and very antiquated systems. Are just like, yeah, but you kind of are a drag and a waste. I think you really need to be reformed from what, I mean, you walk into the building at SABOR and it's like, this is who I pay money to do something. You give me absolutely no support.
Yeah.
Like the National Association
but
of Realtors.
You can't do anything without
Texas Association of Realtors. Like I agree because like they do have the voice, but like these boards, it's like, God, you go on like Austin's MLS and it's like so much more up to date. So I get on SABOR, it's just like, what is this, like 2003? Like, good Lord. And then they came out with their update a few years ago and it was like, this is even worse. Like, it's terrible.
Annoying as hell.
Yeah, it's like, I don't even bother using it. So,
well, there you go, guys. John is an avid supporter of the Board of Realtors. This complete
National Rifle Association. That's what I was going for.
Yeah, it's just you're a complete disgrace to investors. That being said, hope you guys enjoyed this week's episode of Coffee with the Johns. Remember to hit that thumbs up and subscribe if you haven't. And like I said, next week, midweek, we'll be releasing the interview with Dan Francis, owner of Stepstone Realty, one of the biggest brokerages for investors in Texas. That's a great interview. You guys are really going to enjoy that. And we have the workshop coming up in August. So make sure you text the word workshop 210-794-9898. And with that being said, we will be back next Friday. Schedule. What's that said? Why do you say regular schedule programming at 8 a.m. every Friday morning? Coffee with the Johns with the latest news, trends, and headlines that impact you and your business. So with that being said, guys, thank you all for watching.
Have a safe 4th of July. Enjoy it.
And we'll catch you all next week.
Bye-bye.